So there's a new executive order out, and it's aimed right at the U.S. mortgage market. The big promise here? To slice through all that complexity, kickstart some real competition, and make it easier for people to get home loans. So you got to ask, right? What's actually in this thing, and what could it really mean for home buyers?
Okay, let's be real. If you've ever bought a house, you have definitely asked yourself this exact question. The mountain of paperwork, the endless rules, the costs, it's just a lot. It can be super overwhelming. Well, this executive order basically says, we hear you, and it claims to have the answer, framing that complexity as the central problem that absolutely needs to be fixed.
All right, here's how we're going to break this all down. First, we'll dig into what the administration sees as the problem. Then we'll get into the plan itself, the whole cut red tape idea. From there, we're going to zoom out and look at the bigger picture, see how the industry is reacting, and finally, talk about what might happen next. Okay, first up, the diagnosis. What exactly does the administration think is broken in the mortgage market right now? So, if you read the order, it points the finger squarely at a whole web of regulations. The argument is that these rules are at the heart of the issue. They're driving up costs, they're blocking access for good, credit-worthy borrowers, and they're squeezing out the little guys, the community banks, which means less competition for everybody. They even call out things like appraisal rules, saying they're just plain outdated.
And this right here, this quote really gets to the absolute heart of it. The entire justification for this executive order hinges on one single idea, that government regulations are the bad guy here, that they're the villain making it harder and more expensive for Americans to go out and get a mortgage.
So if regulations are the problem, what's the solution? Well, the plan is pretty straightforward. Cut the red tape. That's the big headline here.
We hear that phrase cutting red tape all the time, right? But what does it actually mean here? Well, in this context, the goal is to basically take a big red pen to the existing rule book for mortgage lending. The idea is to simplify things or just flat out get rid of regulations that are seen as unnecessary hurdles for banks and other lenders. Okay, so how does that actually work in practice? The order tells the Consumer Financial Protection Bureau, that's the CFPB, to start tailoring rules specifically for smaller local banks. The thinking is, if you empower these smaller lenders, they can offer more affordable loans, and that, in turn, could hopefully start to bring down mortgage rates across the board.
Now, this part is super important to understand. This order didn't just appear out of thin air. No way. It's actually one piece of a much bigger puzzle, part of a huge and very recent focus on the entire housing market.
I mean, just look at the timeline. The administration has been repeatedly going after large institutional investors buying up single-family homes. That was followed by the Senate actually adding a ban on those investors into a housing bill. Then an order was signed to tackle regulations in home construction, and now, bam, we have this order on mortgage access. You can see the pattern pretty clearly, right?
Yeah, so the big takeaway here is that this is not just a series of coincidences. Not at all. When you connect all these dots, it becomes obvious that housing affordability and access have become a major policy focus, and it's being tackled from all sides, from construction to financing to even who gets to buy the homes.
But what do the experts think about all this? Let's take a look at the reaction from some of the heavy hitters in the housing industry.
First up, we've got the National Housing Conference. Their CEO, David Dorkin, came out in support of the general idea. He said he supports efforts to reduce unnecessary regulatory barriers, and he linked those directly to higher costs for families trying to buy a home.
And then you have the National Association of Realtors. They sounded a similar note, though maybe a little more measured. They agreed that the order highlights the importance of reviewing these barriers, and they acknowledge that, yeah, these can definitely drive up costs for borrowers. So if you put those two side by side, you can see a bit of a difference, right? The National Housing Conference offers more direct support. The National Association of Realtors is a little more, let's say, cautiously optimistic. But, and this is the key thing, both of them landed on the same crucial point. Fixing the financing is only half the battle. You absolutely have to address the supply of homes too.
So, with the order signed and the industry weighing in, where do we go from here? What's the actual path forward?
When you boil it all down, it comes to this. The stated goal sounds great. Make it cheaper and easier to get a mortgage. Who wouldn't want that? But an executive order is just a set of instructions. The real-world impact will depend entirely on how agencies like the CFPB actually interpret and implement these new directives. They have to walk a really fine line between easing up on lending and still protecting consumers.
And all of that leaves us with the million-dollar question, doesn't it?
This order is aimed squarely at tackling the barriers to getting a loan. But with these huge challenges in both housing supply and affordability, is cutting some red tape in the mortgage market going to be enough to truly reopen the door to homeownership for more Americans? I guess only time will tell.